The standard fix and flip doesn't work anymore. Auctions are a pain. Wholesaling takes time and persistence. Are you going to buy tax liens? So, if all of these things are not good, all of these strategies don't work, how do you make money? Do you just drop everything and become a developer? That takes schooling and familiarity. If you're a prospective LP looking to diversify your portfolio at a local level, how do you know which project to invest in? What do you do? Some of the best real estate opportunities aren't found in massive developments. They're found in the overlooked middle. In Durham today, the math behind 4 to 12 unit infill housing with buy right development is one of the most compelling investment opportunities in the triangle. And today, we're breaking down why that math works and why this specific product type sits right in the middle of Durham's growing housing supply gap. You'll hear a lot of people talk about housing shortages and affordability challenges in Durham. We'll talk about that. If you're a passive real estate investor, a local professional looking to diversify into real estate, or someone who simply wants to better understand the economics behind Durham's growth, this episode is for you. In today's episode, we're going to be talking about why Durham's infill math works, the economics of building 4 to 12 units in Durham, and the supply gap and how something called the missing middle helps us solve that issue. We'll unpack how these dynamics shape land values, development feasibility, and long-term investment performance in Durham's urban neighborhoods. So let's dive into it. Before we get started on the specifics of development in Durham and buy right infill, let's kind of talk about Better and why we're the ones talking to you about this. Devin, how did Better actually begin?
Yeah, so we actually got our start as fixed to rent investors. Looking at, even starting before COVID, you could very easily buy something, fix it up, refinance into a 4% interest rate loan. Everything's dandy. You got growth market and you're getting all your capital back. And it's really, really working well. We set up our own construction company to assist with that, as well as a brokerage. Really ultimately ended up deciding we should do this for other people, started talking to other people, fixing in, raising capital to do it with other people. At the same time, we started getting squeezed, and we can go into more details of why fixed to rent and fixed to flip started getting squeezed during that time period. And at the same time, in the area in Durham and cities like Durham, really getting alternative opportunities to develop the land on a smaller scale that traditionally was excluded unless you had volume like a tract builder. And so today we focus pretty much exclusively on those sorts of deals and, really using other people's money and partnering with them to develop in that manner and invest and make money.
So if I'm understanding right, there was a whole lot of digging through, well, should we do this? Should we do that? We had this component, we had that component. We want to work with other people. And ultimately, we kind of just landed on, let's just kind of push forward on this initiative ourselves because it's the most efficient way to do it. And it's the fastest and the cleanest. And people wanted to be on board with that.
Yeah, and I think we proved the concept too with our first pocket neighborhood, and we're like, okay, it took a little bit longer, was a little bit more capital intensive, but the predictability and the ultimate outcome was worth it when you start adjusting for that risk.
Yeah. And so what do you think the future looks like?
Yeah, so the future is more of that. We can get into some of those specific details. In Durham specifically, they're allowing more creativity, more problem solving, things of that nature that are going to allow for more of these deals to work. Additionally, other cities, Raleigh, are being progressive. Pretty much any of these cities that don't want to end up in a situation where they have massive suburban sprawl, housing crisis where people can't afford to live in the cities in which they work.
So with everything you just said, how can we reassure or how does that concern LPs and their capacity for working with us?
Yeah, so the pitch really is we're going to get those same returns that we've always gotten, and we're going to have more certainty and be able to deliver with more confidence on the product. The comps, the timeline, everything along that nature is going to be better. And we're going to be able to be more creative in what product we're creating to match the risk profile rather than, building all these 1,200 square foot houses. Yeah, that's great. But you get kind of scared seeing some of them sit in certain neighborhoods and things like that. And you're like, I wish I could build just a 1,400 square foot house. And going forward in places like Durham, you're going to be able to do that more.
Gotcha. So before we get too deep down the rabbit hole, let's kind of scale it back, start from the beginning, and talk about why we like to work in Durham and also to some extent Raleigh and other like bigger cities in the triangle. The main reason why all of this exists, and I guess the starting point for all of this, something that everyone's aware of, both locally and nationally, is this housing supply shortage, right? So how is Durham's housing supply shortage related to the national housing supply shortage, and what does it mean for what needs to come next?
Yeah. Just backing up and just thinking about basic supply and demand right now. A lot of people talk about it. It's just the key factor. Everybody knows there's some data point out there. It's something between 5 to 10. Like we just stopped letting people into this area in the triangle. It would take 5 to 10 years for the housing supply to catch up and actually hit an equilibrium. You combine in another factor on top of that, that like you could sell a house in New York for $1 million and easily, like not even a great house, because that's just where the market is there, and move to a place like Durham and buy a house for half of that. That is a better house.
A
That
newer
just
house.
it's a what?
A newer house too.
Newer, everything about it. Obviously, maybe I'm a little biased here in Durham, like New York, okay, it has some restaurants, but like it has some negatives that I don't need to list out, and they cost a whole lot more.
That's right.
I mean, Durham food is getting expensive now, but the housing is still so much cheaper where it's like, whatever, you got the disposable income. People want to live here. The lifestyle is great. You know, there's a reason why people are leaving New York, Philadelphia, California. If you're in the Midwest and you're in Chicago, and I know there's a snowstorm coming up soon, like snow until May sort of issues, like people just don't want to deal with that. So you combine that in with the fact that you already don't have enough houses, the housing prices are going to continue to outpace inflation. And that's the real issue.
So you think Durham's supply shortage and the triangle supply shortage in general is, I guess, more urgent than supply shortages elsewhere, maybe in places with worse weather or maybe in like smaller towns or like because the Southeast is where people want to be, right?
Yeah. Southeast, Sun Belt. I mean, basically, people have been talking about this for a couple decades now, and it hasn't stabilized. There's not enough happening. Everybody sees the issue coming. There are some governments out there. You could sort of like people, and hey, your doctor tells you need to lose weight before you have a heart attack. Some people wait until they have a heart attack, and some people do something before it. Certain governments are trying to do something before they have the heart attack because it's pretty obvious it's going to happen.
I think when we take a look at, the Southeast compared to nationally, obviously the supply shortage is a little bit more urgent here because people are moving this direction. But when we get a little bit more hyper local, when we look at Raleigh, Durham, Apple Hill, I'm going to sound like a broken record here, right? But I don't know if you know this, but we have three really prominent research institutions here, and so even if adults aren't slowed down in the amount that they're moving here because maybe corporations aren't coming, which isn't happening, right? Disney is coming very shortly here. But you still have these three huge schools in Duke, Carolina, and NC State that are continuing to get bigger and can carry a lot of this population growth on their own.
Yeah. It's when you talk about the university, you're like, university, that's great, student housing, yada yada yada. What they're not connecting the next dot to are jobs and businesses and recruiting. The amount of universities drives businesses, small businesses, medium businesses. Like you're not going to have some city like I don't, where your city where it basically had one business, and when that business left and it went to China, the city died. And so from an employment perspective, even if you're at this one business and you get fired, the business doesn't do well, whatever happens, it's okay. You can probably find another job without having to sell your house. And that is a very attractive prospect to pretty much anybody, especially college educated people. Those jobs that require college degrees, there are just tons of them here. Great employers. Even, in a downturn, I hear about some people getting terminated from their job lately, and they're getting 9 months severance. Like, if you live in the Raleigh-Durham area and you get 9 months severance, the odds of you having another job by the time those 9 months are up, really high. And so you're probably not having to move too. So when more people come in and more businesses come, what do? We need more houses for people, because that person's not selling their house, especially not in this environment when they probably bought it 10 years ago with a 3.5% mortgage.
Yeah. So now that we've kind of established that, there's a national supply shortage of housing, which we all know, specifically the Southeast is a little bit more urgent to solve. And in this area in particular, there's no reason to think it's going to slow down, right? Now the onus is on the cities Durham, Raleigh, Chapel Hill. I mean, even like the suburbs, but mainly the cities, the onus is on them to solve that issue. And when we think about how they solve that issue, I think we're going to focus a little bit more on Durham here than we are Raleigh or Chapel Hill. But how is Durham solving this issue?
Yeah, so Durham originally, at least the code, the base of the code that they've worked on was written in 2006, and a lot has changed since then.
Mhm.
There were some, with the demographics of the city, crime way down. As
Right.
much as people maybe are worried about crime or this or that in Durham, even around downtown, like you feel pretty safe around downtown. That wasn't necessarily the case in 2006. And the city's made some changes just to test some things out. Things like I mentioned, the 1,200 square foot houses. Durham has specific provisions for housing like that. There's a lot of success with that. And then there was a large private text amendment that got passed in 2024 that allowed even more of that type of housing specifically. And ultimately, the city also decided, hey, we want to look very forward decades from now and create a city and plan it out today for how it's going to look 20, 30 years from now. And they created their comprehensive plan. And using that comprehensive plan now, they're in the process of changing all of the zoning and all of the rules around that to create a city that is much more walkable, much more bikeable, having more urban density
Mhm.
that requires less suburban sprawl, and these mini commercial districts that really create a lifestyle that's I mean, quite frankly, much more European rather than American. Our classic American society is you get in your car to go anywhere. You live way outside of the downtown area, and you got your half acre to an acre land, and basically kind of like the view of the intro scene to Weeds, if you remember that show, that all the ticky tackies that kind of came up popping into the 1950s and for several decades after that.
So I guess the main takeaway here is if we kind of scale it all the way back to what we first said at the beginning of this podcast is we think about traditional investing methods like fix to rent, fix and flip. We think about things like wholesaling and we think about things like auctions and all of these like these are just niches that people sort of have occupied and there's no push behind it, right? It's not like the city is really pushing people to do fix and flips. It's not really something that's all that important to them, but based on what you just said, it seems like Durham itself is really pushing people to do these things. There actually is momentum behind the type of investments we're making, so that makes the future a lot more sustainable.
Yeah, it comes down to the elected officials and the mayor and understanding how to achieve some of these goals. I mean, Durham specifically, they haven't really quite figured out single family housing, but when it comes to urban apartments, Durham in the last 2 to 3 years has actually had a decrease in rent. So, all these NIMBYs, all these people out there who try to pretend that supply and demand isn't somehow related to pricing of rents and housing, like Durham has kind of had the proof in the pudding here when they put up hundreds of these apartments close to downtown and got rent to decrease by just building more housing supply of that particular type. The problem they're seeing now is like, great, we've got all these apartments. What about anything else? Like when those people have children and want to live in a single family house and have just a little bit more space and a yard.
That makes sense. I think so. Like that's great, right? Like Durham is putting momentum behind this. They want us to do things. They want us to push forward. But cities also want to build affordable housing, for example, right? And they're not necessarily incentivizing developers to build affordable housing, and so people just don't do it. And so sometimes wanting people to do it and even orienting the rules so that you can do it isn't enough. And so we think about it as there's this supply shortage, there's this need, right? And then you have the faith of the local governments behind you, supporting you, doing these kind of things. But those two things by themselves aren't enough. When it comes down to it, the economics still have to work. And that's why people don't build necessarily affordable housing, right? Because the economics just don't work. But there's some real differences here as to why the economics work, both from just like money in, money out perspective and also like a risk adjusted return perspective, right?
Yeah, so your construction costs are going to be what they're going to be. You build in Chapel Hill, you build in Durham, you build in Raleigh, it's the same. It's kind of even the same if you go out just a little bit north of Durham and you get into Person County. Like maybe you can get a little bit cheaper because of whatever happens in Person County that we don't really look into because it's Roxborough's got like 10,000 people in it. Those levers you can't really pull. So one key lever that you can actually pull is your cost of land, because that can change your cost per lot, your cost per housing unit. And it goes to something that like I hate when people are like comparing like oh, well, this acre is worth 100,000. And so therefore an acre over here should be worth 100,000. And
Yeah,
it's
yeah.
like,
I just bought an acre in Times Square for 100,000 too.
Yeah, that'd be a great deal, but if you can put 8 houses on a half acre you can put 1 house on 1 acre, how in the world, if you actually try to think through the numbers of how to be a developer and build houses, is the 1 acre with 1 lot going to be worth remotely close to another acre you can build 8 houses on, or a half acre you can
Yeah,
build 8 houses on?
yeah,
And so um, the city recognizes this. The city recognizes, "Hey, we're gonna allow more townhouses to be built with less red tape because we think townhouses could be a great solution to these problems because we don't have enough townhouses, and that's great missing middle housing. The city wants more of that. They're making it easier, especially at our scale where we are local builders with local subs. We're not shipping in people from Virginia or Maryland or anything like that to get our projects done. Those profits are staying in this local economy and increasing property tax and having people who are actually really thoughtful about what they're building rather than a tract builder who maybe that money is going back to Times Square or somewhere close to Times Square with your
yeah,
100,000 acre.
yeah, yeah. So, I mean, it's interesting, right? Because we are, we're developers, but we're also a construction company, and so, like you said, it's important to understand that we can't pull levers of cost of lumber, cost of labor, even, right? We can't. There's really not a whole lot we can do about that. And from a construction company standpoint, our prices are mostly in line with everybody else's, right? Like
Yeah.
we're not cutting $50,000 off of our margins to get these deal done, but we're also not charging double so we can run away with profits. We're just charging ourselves the standard amount that contractors around here charge, and that's to support labor and materials. But from a development standpoint, you can do what you need to do, utilize the rules to lower your cost of land. Now, when we look at that from a risk perspective, you would think, oh, development, that increases the risk. So, of course, we're going to make more money. But it's not exactly that way, right?
Yeah, and really what we're doing is not that different than what maybe 30, 40 years ago you had to have a large volume to do, where they're buying land for $1 million, $2 million, and then somehow it's worth $10 million, where nothing's been done to the land except for what's been happening on paper. And it's a hard concept for people to understand, or really to even understand, like, at that scale, when they're doing that, they're capable of doing it because they've got long-term patient capital. That may take 3 years, 4 years to rezone, go through city council, all of those things. And they're getting a huge paycheck at the end of the day for doing that, but they're taking something that could have 10 houses on it and they're putting 200 houses. And so there's a lot that goes into that. And the
Mhm.
city is trying to do that on a smaller scale to allow us to take 1 lot and make it 4 lots. And when that is happening and when it's done appropriately, you're creating housing that otherwise wouldn't be there that people want to live in and rebuilding without having to recreate infrastructure like roads, things of that nature that would be involved in taking where 10 acres, or whatever it may be, had 10 houses on it and allowing 200 townhouses to be built. And so at our scale, we're just tapping into what was a risk profile at a larger volume and bringing that and making it more accessible. And when I say we, us as developers, but also the government here wants to see developers of our scale provide this and be successful.
So, and to kind of circle back on all three of these topics as a whole, because there's a supply shortage, because the city is, at a national level, at a regional level, and at a local level, and because of that, the city is pushing us forward. They're supporting what we're doing. That in turn lowers the risk profile of what we're doing because not only for now, but for the future, because we have people behind us who are supporting these kind of things and want us to build this. But because we have these tools both financially, creatively, and boots on the ground to take these lots and turn them into more lots where we can build more density, and because we're doing what they want us to do, the risk profile actually isn't coming up in turn with the amount of money and the amount of profits that we're making on each deal.
Exactly. I would argue on most of our deals, we're actually decreasing risk. And, you never know when like a house is, you're trying to compare this house to that house. And
Mhm.
this one's a 2005 and that one's a 1985. And it looks kind of the same, but everybody knows that if it looks the same, but one's an 85 and one's a 2005, the 2005 should cost more.
Right.
And when you're doing this style of development, you're pulling new builds. You know what new builds look like. The photos tend to look the same, but when you go into the house, you know what sort of quality they are when they're being built. And that's one advantage we have with boots on the ground. We go and we look at what other builders are doing and why a house sold for 400 versus 500, even though it's a quarter mile away. And they're both 1,200 square foot houses. We know why. I mean, a lot of times we can even tell in the photos, but going in and physically seeing, driving by, seeing the design, and just knowing exactly why that comp is exactly the way it is without being and having to speculate like, well, if I tear down this wall and I open this up and it looks like this, and then you find some wires like knob and tube that you weren't expecting in a rehab or plaster that, is going to double your demo cost, things like that. Like we are actually decreasing risk because we know exactly what's going to happen. Maybe, oh, the soil was a little soft. So we had to dig deeper on our footers. But once you get your foundation in, new build's easy. Anybody can pick up a new build plan. Our subs that we were working with 5 years ago, they want to scale with us and just do new build because they make more money with less time. So for them, it's easier. They're just following the plans. They're not having to think. They're just doing. They can use cheaper labor themselves. When you're talking about the license holder and his labor and having to check on their work, it's a lot easier. Did they follow the plans or not? That sort of thing versus they started trying to follow the plans and they realized this thing was behind the wall that for whatever reason means they have to reroute stuff. It's just surprisingly actually lower risk. And once you get your taste of it and you do it once, you're like, okay, why was I ever doing it the old way? Because this is just so much easier in terms of time, your brain power, and quite frankly, you have a blank canvas. You can do whatever you want. And as trends to change, like, okay, whatever. You just have a build envelope. You fit the build envelope and you can do whatever you want within there. And with rehabs, you are stuck within the walls you have, unless you want to spend a lot of money.
So, from a construction standpoint, there's less risk on the build side just because there's more people who are capable of doing it. It's easier. You're not encountering issues that were created by other people in the past. You don't have surprises. You can do all the due diligence up front. But from the development side, there's also less risk because, like I said, the city's behind us, but we know what we can do before we go ahead and do it. That's why it's called by right. And sure, there are some, it is still development at the end of the day, right? There are still, in my opinion, development is largely pushing through barriers and pushing through obstacles and figuring out solutions to problems, whether that's a ditch or a stream or an easement or whatever it might be. There is still going to be some of that popping up, but because locally the government supports us in what we're trying to do, they're continuing to alter the rules, change the rules, and adapt them to make it easier for us to do these things. So lower risk on the development side and lower risk on the build side.
Yeah. When we do our due diligence, because when you're buying a rehab and you're doing due diligence, like you have to tear the wall down, but you can't do that during due diligence. So you don't really know. For us, we can test. We can see like, okay, are we going to need a sewer pump? We can see, okay, how deep's the sewer at the street or how far do we have to run the sewer or something along those lines. We can figure a lot of that stuff out in due diligence. And our very, very, very worst case, like we've done it before. I mean, we've lost $10,000 on a deal because we thought a stream was one location and it moved to another location. But you know what? That was before we spent $200,000 on the deal. We lost $10,000 one time because we thought we had a home run deal and a stream was in a different location and we didn't close the deal. But if there's a situation like that or whatever the comparable you would call in a rehab where all of a sudden you find out after due diligence, oh no, this wall was this way. I couldn't get an engineer in because the seller didn't want me to pull down the drywall to have the engineer look at the support beam. Like you could be spending way, way more than that 10,000. And it's not scalable to do rehabs. Just quite frankly, like it just generally isn't scalable in the way of like, yeah, if we tear a house down, we can build, I think about our project on Duke Homestead. We tear our house down, we can build 7 houses. Like the diversification of risk on 7 houses instead of being stuck on one, it's just no question in terms of the risk reward, both with your money and your time.
So, speaking of scaling, bringing back the holistic picture here, as a company, as developers, we are scaling this year. We believe personally and professionally in having clear goals. That's important to us. Like you can look at our core values and our processes on our website, like everything is pretty clear. That's something that's important. And our goals are ambitious. We're looking to this year to fund one project per month. So we're coming up on funding a student housing project, our first built to rent project where we're taking money from our investors. We've done built to rent project in the past and they were so successful that we were itching to do one and we found the perfect project. And so that one we're wrapping up now, and then going forward, we're looking to get one funded every single month for the rest of that year. In supporting that, we're looking to expand our base of limited partners. We're looking to bring in partners who want exposure to smaller scale development projects for this exact reason, right? We want partners who are interested in investing in real estate, but also, are feeling a little bit open minded and like the idea of a lower risk, higher return project, and like the idea of actually just improving our local economy and our local housing and all of that stuff in Raleigh and in Durham. So if you are interested in learning how we approach these deals, how we structure them, like what our pipeline looks like, talking more about our goals or our investment criteria, you can feel free to reach out to me, to Devin. We're available via email. We're available on LinkedIn. We're super accessible. You can find us at investor events, networking events. We host our own. So reach out there or comment directly on this video, and we'll be happy to connect.
Yeah, and we are serious about that. We're passionate about the product that we are providing out there. We think it's good for everyone. I actually had a mutual friend talking about. He was like, I was talking to Ian, and you can just tell how passionate Ian is about this. I'm pretty passionate about it too. We're happy to connect with everyone. We love to network with people who have this common goal of creating win-win scenarios related to housing.
Yeah. Beyond that, beyond just investing, like I said, we are everywhere. And if you want to stay up to date on topics like this, we send a biweekly email where we share hyperlocal market analysis on one project that's closed or something that has caught our eye. Every other week, we share articles about things that are going on so you can, feel like you have your ear to the ground, because we have our ear to the ground and we're working hand in hand. We'll have direct links to thought leadership content, such as other podcasts, interviews, stuff we've done like that. And then there's information online about free events we host every single month. And we have a networking event this upcoming week. And then quarterly, we do like a coffee and case study where we dive into some of our development case studies. So subscribe to that at betterpropertiesllc.com. Like and subscribe. You can use the link in the video description. Find us on any of the social media. And I guess with that, we'll see you in the next video. Thanks, guys.
Thanks, everyone.